Hey everybody, Brian Shannon from Alphatrends.net. Today is Friday, the 22nd of March. I hope you had a good week of trading. Markets, for the most part, were higher. We saw a little bit further pullback in the biotechs. They're down month to date 5% and up 5% year to date. Bonds are down year to date, and Bitcoin and oil and Ethereum all pulled back a little bit. Let's take a look at these charts and make some sense of it. As always, we have the daily chart on the left, meaning each one of those candles represents one day. And this is your 20-day moving average, the red. The blue is the 50-day moving average. That pink one there is the year-to-date anchor. This is the 200-day moving average. So over on the 30-minute time frame here on the right, the orange is the 5-day moving average, and we have a rising 5-day moving average. So we look at this market right now as innocent until proven guilty. As long as we're above that rising 5-day moving average, we give the benefit of the doubt to the buyers. Now, it wasn't that way the entire week. We gapped up on Monday, pulled back, and then a little bit of indecision ahead of the Fed. But once the Federal Reserve announced their monetary policy, we drop an anchor right there. And that's exactly where the S&P 500 found buyers today. We didn't break below that. We are below the 2-day volume weighted average price. So from that gap up yesterday, and that's not a big concern. The bottom line is we remain in a powerful uptrend on the daily time frame, and as long as we're above that rising 20 and 50-day moving average, it's innocent until proven guilty. We're going to give the benefit of the doubt to the buyers. We'll get cautious on the intermediate term time frame, but not bearish. We held this band of support. Now next week, what we'll be looking for is this area here to be our first important level that we want to see the market hold. 517-ish. As long as we hold above that, we're going to give the benefit of the doubt to the buyers. The NASDAQ, similar situation in that it's been a little bit weaker actually recently as we've closed below that rising 20-day moving average on a couple of occasions. But it still remained higher. That is the trend of it. It kept rising, as does the 50-day moving average. So we were still giving it the benefit of the doubt to the buyers in here. Just very cautious over here, though. Absolutely. I did not turn bearish in here, but I was definitely cautious. And frankly, I thought we had a good chance that maybe we were going to see a pullback down to the 50-day moving average. But I don't let those thoughts get in the way of making money. I'm prepared for the market, and when it's down here, I'm prepared for the market to go lower and have my stops and that sort of thing in place and reduce my share size. And when the market turns higher, well, I have to get bullish. That's my job, is to listen to the message of the market and manage risk. For next week, you can see the same thing here. This purple anchor from the Federal Reserve, that's a chapter. It's not a chapter, but I wrote extensively about that in my book, is that the Federal Reserve announcement is an excellent place to set an anchor, as is the black week to date, the red off of recent high, and the blue month to date anchor. They're not always going to be perfect levels of support or resistance, but we want to use them as reference points. And when we get there, it tells us we want to observe their behavior like we're observing in the NASDAQ at the anchor from the Fed. So as long as we remain above that and today's low, then we're probably going to be okay. The first level of significance is right here, and that would also be approximately on Monday where the 5-day moving average rises up to. What I'd really like to see is some kind of little pullback develop and then turn sideways and then perhaps higher. The market continues to defy anyone who's bearish, and the Russell 2000 had a sharp reversal this week. For those who chased it, hopefully you got out of it. But I like the way this is setting up better now. It ran quickly. I didn't get involved. Now it's pulling back in an orderly way. This is a key level for next week right in here, this 204 to 205 level. That's where we have that 5-day moving average. We have this week's week-to-date anchor. We have the anchor off of this prior peak, the year-to-date peak, high that is, and the month-to-date anchor. So 204.5 is what I'm looking for. I always say don't buy the dip. People always ask me, what does that mean? It means buy strength after the dip. This is what that might end up looking like, is something like this. I would want to be a buyer over here and then set my stop under this low or this low. Depends on what your time frame is, where you want to set your stop. I don't know anything about your financial, nor do I really, am I interested. I want you to take this information and make it your own. I'm not here to tell people what to do. By the way, if you're listening on YouTube, please give it a like, subscribe, comment. I always respond to them. Semiconductors, I was hoping we got a little bit more pullback in here today. This is what I'd sketched out for subscribers to Alphatrends last night. We didn't get get that, but we are, just digesting a little bit through time here. Where was the low here? Well, right on the anchor from the Fed. Not a coincidence. The daily time frame is still very bullish. We had an orderly pullback to the rising 20-day moving average. Next week, if we can maintain probably above, this is going to be your key level in here. That's the 5-day moving average. And actually, that 5-day moving average will be rising up on Monday to come into this area right here. So 223 to 224, if we were to pull back into that area and then to start turn sideways, get back above the anchor from the Fed, then maybe it's a purchase right here with a stop under this low or this higher low if we get that type of move to develop. So semiconductors are definitely worth keeping an eye on. Biotechs are worth keeping an eye on. This is what I had hoped would have happened today. Instead, we pulled back and continue to pull back, so there was no reason to buy it. We are at an important level on the daily time frame, and this is what some people will call support. I don't buy here. It's so far been support, but if it breaks, then it's no use to us. Let's back it up to the weekly time frame on here first, because on that weekly time frame, you can see that this has been an important prior level of resistance, and resistance broken tends to act as support. Well, that's further strengthened by the fact of strengthened, that is, as a level of importance, because we have this red 10-week or 50-day moving average. We have the rising at year-to-date anchored VWAP. So a lot of things in that area tell us to be on the lookout for a potential place where this market can turn. Well, we saw the month-to-date anchor has so far been holding this market back. It tested it again this week. I'd really like to see, maybe a shakeout would be best, and then kind of recover in here, get that 20-day moving average to flatten out, and then that might look like this on the move me out of the way, on the daily time, or sorry, 30-minute time frame. Maybe we get a nice little shakeout, and then something like this, and then maybe late next week the biotechs are worth being a purchase, that is a low risk purchase. Right now, I'll keep my eye on it on Monday, but I think it's highly unlikely it's going to give us a low risk entry on Monday. I think, the best case scenario would be something like this, and then perhaps to be a buyer over here. So keep a close eye on the biotechs. Let's talk about Bitcoin. We'll go back to the rest of the indexes in a moment. As we know, we had, and I had posted that video on YouTube as well on Wednesday, talking about that I was purchasing it right here. I'm sorry, right there, and that's this on the 30-minute, 4-hour time frame rather. That I purchased it there, and then I sold it up in here. I was looking for a more orderly kind of consolidation here. I purchased some right there, as I mentioned on Twitter. So I might mention this buy on Twitter. I mentioned that sell on Twitter. I mentioned this on Twitter. If you're not following me on Twitter, you're really missing out on a lot, and a lot of good free stuff. I had sold half of that today, as I mentioned to subscribers. That is half of my purchase from here. I purchased it at 65 yesterday. Sold half of that, and I'll look to repurchase it. But right now, we have this little lower high and lower low, so I'm simply reducing risk in there until it kind of rights itself. So I'll be keeping an eye, of course, on Bitcoin and updating that, most likely on Twitter, not most likely on YouTube. Financial stocks, they hit that all-time high, and they're doing exactly what they're supposed to do. When we see a rally of this magnitude, and it's been a phenomenal rally from 31 to 41, 30%, 33% in this short 6-month period, 5 months period. When we look at the weekly time frame, this is the all-time high. We've been talking about that. Last week we said it looks like it's getting more likely it's going to break that all-time high, and it wouldn't surprise me at all to see a new all-time high sold into. And that's what we had today. Yesterday was the all-time high. Today we saw some pullback. It doesn't mean to me that the rally is over. What it means, though, is people who bought this so-called breakout or who decided to cover their shorts up there were highly uneducated bets. I'm not calling for a top in these. I'd still like to see them maybe do something like this, have a little shakeout, and then perhaps be able to continue to move higher. But right now, I think you've got to be really close with your stops in the financials. Unless you're an investor, then you're playing a different game than what I do. As I always mention, what I talk about here in these videos and on Twitter always is that of a swing trade time frame. Let's see what else. Energy names, right? Energy, as you know, I was mentioning those as positive right over here just before they broke out. I don't trade energy names, but I shared that, and hopefully you're still involved if you trade these things. I don't trade energy names. I don't care that they're higher. It never bothers me. It's part of my discipline, but it's making a pattern, beautiful pattern of higher highs and higher lows above the rising 5-day moving average. So I would suggest you protect your gains with stops up under those. Apple, it's just a broken stock. I think some people were surprised by the pullback the last 2 days. I'm never surprised when a stock below a declining 20, declining 50, and declining 200-day moving average head lower. That's exactly what they're supposed to do. It's in a downtrend. It's in a bearish environment. Don't waste your time on Apple. Don't waste your time on Tesla. It's in a bearish environment. Below these declining moving averages and declining 200-day moving average says it's guilty until proven innocent. Don't waste your time. Don't waste your effort. Don't waste your money trying to buy this stuff. NVIDIA, beautiful move this week. And I had mentioned it again on Twitter right at the perfect time. And the perfect time was, I'll show you exactly where, which was the anchor from the earnings report. Another thing I spoke about in the book. I had mentioned it right here exactly at that point. I think it was 8:56 or so, saying it's right on its anchor from the earnings report, and it had a phenomenal rally from there. Hopefully you got involved. I day traded it. In hindsight, I wished I had held it, but that was down in this area. Where I had gotten involved was not on the pullback, but as it got back above the anchor from that day. My stop was below here. I sold some in this area, and then I've forgotten by now because this was 4 days ago, but I sold the rest on strength, and that was a beautiful trade. So if you're not using the anchored volume weighted average price, you're at a severe disadvantage to true professionals in the market.